Jim Carroll, Senior Wealth Advisor and Portfolio Manager at Ballast Rock Private Wealth. What is your view on the recently announced Federal Reserve interest rate path?
Well, I would say that on the one hand, it was not surprising. I think the strong consensus was for a 25 basis point reduction in the interest rate, and that's what we got. I think the real question was, would it be delivered with a so-called hawkish tone or a dovish tone? It seems to have turned out to be right in the middle, kind of a sweet spot. Market response has been generally positive. I think the interesting thing is, um, as people may know, the Federal Reserve really only controls the so-called Fed funds rate. They don't control all interest rates, which I think some people get confused. Um, and their mandate is to try to maintain price stability and maximum employment using interest rate as a tool. Um, what I found interesting was while the equity markets appeared sanguine with the result, the bond markets, longer term interest rates actually rose following the announcement in the last couple of days. So it will be interesting to see how the bond market behaves over time and the extent to which that influences sentiment in the stock market.
With that in mind, how might wealth and asset managers think about that in relation to investor portfolios?
Mhm. I think we need to take this data point and look ahead. Um, the expectation is that there will be additional interest rate cuts. Theoretically, that's good for equity markets and should be good for corporate earnings. You know, if the interest burden is lower going forward, that should be good for companies in the economy. It should help stabilize employment. Uh, I think the real question that is behind us is, have we tamed inflation? Uh, the whole tariff situation is still unresolved. And so I think there's still a little bit of nervousness remaining, even as stocks have, rallied quite dramatically from their lows in April. So while investors are feeling pretty good about their stock portfolio right now, and some are even feeling some FOMO, right? Because, gee, Jim, why don't we have all our money in NVIDIA? Um, I think there's a little bit of caution. There are still some so-called known unknowns to play out as we look forward. So I would say that our approach to portfolio allocation in this environment is to, continue to be really steady as we go. We've had exposure to equities. We've also had exposure to private markets. We don't see this as a reason to really change allocations right now.
Jim, thank you very much for your time. Excellent insights.
Thank you, Chris. Happy to be here.